From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 22nd, 2016. In today's video, what I'm going to do is take a look at several different currency pairs that I think are in key decision points, are either going to break out and continue the current momentum, or it's time for some reversal from the levels that we're at. So we're going to take a look at several of those as we try to decide, are we going to look for continuation, breakout, or some sort of intraday reversal for these currency pairs. Taking a look at the news calendar first, though, we have a very light news calendar today, relatively speaking to yesterday. Yesterday, very heavy on the news. Today, relatively light. We do have a couple of things on the calendar. Unemployment claims out of the U.S., ECB president scheduled to speak at 9 a.m. Eastern U.S. time, and the Bank of England governor supposed to speak at 1 p.m. But other than that, everything else listed as low to medium impact for the day today. And then tomorrow, we have some news out of Canada. So let's get started here. USD, CHF, dollar, franc. You can see yesterday's news causing this currency pair to turn much lower. We went from all the way up here a couple of days ago into the 97.90, 9800 level, all the way back now into the 96.70 level, the blue shaded area here in the middle of the chart. The question of the day, of course, is, are we going to see a final breakdown of 96.70 and a continuation of this bearish push that we're seeing, or is this going to reverse? Because if you just go back to the left of this little black box here, you can see this big long red candle, couple of days, settled down into support into the blue zone, and then reversed and went all the way back up in towards 9800. So we can see that happen before. So we can't take for granted that it's going to continue to move in the current direction until or unless it actually breaks 96.70. That's going to be the key breaking point. It needs to get through this 96.70, 96.90 level, the blue zone, so we can have confidence. Again, all that's about is increasing our confidence that it's going to continue to accelerate towards the next level, which would be the orange shaded area down here as our next support. So there's our next support if and when we finally do get the real deal breakout underneath the 96.70 level, underneath the blue zone. Otherwise, we'll be watching this blue zone for evidence and key reversal indicators that the market is now going to find support here and turn around like it did back there on the left hand side. So we don't want to take for granted it's a breakout. We want to watch for it, but we also don't want to take for granted that it has to reverse, because it doesn't have to do anything. Let's go ahead and take it down to the 4-hour time frame. Again, take a look at what happened back here. We found support and eventually reversal. We don't have any indications of reversal yet. We don't see any price action that indicates reversal, but we definitely know that we're at support, and we want to be cautious about just going short. To me, there's only two reasons to go short. It either breaks through a support level, which clearly the blue zone is that. We can see that over here. It breaks through there, or we see it go back up into resistance, which at this point is the yellow shade area. So if we're going to go short, we need to go up into the yellow zone or break through the blue zone. Otherwise, watching for support and reversal clues from this blue shaded area could be our opportunity for the day today on the U.S. franc. Similar situation over here on the euro dollar. We see it challenging. We see it testing the yellow shaded area here on the chart between 112.05 and 112.25. But it really hasn't broken it yet. And I would send you back to a couple of examples over here. Let me take this red circle if I can get it selected here. Squeeze it in a little bit, and let's look at a couple examples. Look right here. We challenged it right here where the market hit the yellow zone, challenged it, and reversed. You see this blue box right here where it broke above it or pushed above it and then turned back lower again. So again, we see a couple of examples historically where it's challenged the yellow shade area, even back here, and pushed above it and then turned back down again. So we can see several times challenging it. So we want a real deal breakout. We want a clear evidence that it's breaking and going to continue to pressure higher towards the next resistance. We also see a lot of congestion between the orange and the yellow shaded area here. Take it down to the 4-hour time frame. Now, I might have our first evidence of a real deal breakout. We have a clear open above the yellow shaded area. So for the time being, if it opens and closes above this yellow zone, this continues to be our, or will turn into our support, similar to what happened back here. It challenged it here, couldn't stay above it, went below it. Then it finally opened and closed above it, and that became the support. So that's what we're looking for today, is this candle to stay above the yellow zone, it to become support at the yellow zone, maybe even buying there. Remember, what's your risk reward here? If you were to buy it right now, what's the risk? Well, I think the risk is a break underneath the yellow shaded area. So if you're buying, your risk is a push back underneath there. So if you're going to buy it, it makes much more sense to allow it to dip, drift back down to the yellow zone before you buy it. And then we can look to target back to the orange zone. So we have the potential breakout, but I want to be a confirmed breakout with an open and close, dip back to the yellow zone to give us a clear clue that this is going to continue to pressure towards the orange shaded area. Take it over here to the GBPUSD. We take it over here and we can see challenging the orange shaded area today. 1.3080, 3050 is the orange zone, is challenging it. We've seen it before. Look back here where this little green circle is. We've seen it as support here. It challenged it, couldn't break it, turned around and went back up. We look back in further into history. There's a darker green circle right here where we've seen the market found some resistance there at the orange zone before. I'm trying to get it selected and moved over, but having trouble doing that. See if I can get that green circle. There it goes. You can see that little green circle right there where we have seen resistance there before into the orange shaded area. And then just before that, you can see some support there. So we know that that orange shaded area is a clear decision point for the market. Again, that's 1.308050. If we're going to see it go higher, it needs to break out above it, which it hasn't done. In fact, we've seen many times where we've seen resistance and reversal, just like back over here on the left-hand side. 4-hour time frame, take it over here. We see resistance here. It fell back down. We're challenging it now, unable to break it so far. So for the time being, we're watching for resistance and potential evidence of reversal, maybe back underneath 1.3050, or eventually a final breakout above 3080 and the continuation back to the blue zone. So we want to confirm breakout before we take the long, or watching for evidence of reversal to go back down towards the purple zone as our next area of support for the pound dollar. Take it over here to the US CAD. It's at a critical decision point as well. We go back along this pink shaded area, and probably most important, let me see, I'm just going to take this blue box that's up here and pull it right here into that pink zone. Take a look right there. We see multiple days. Again, this is the daily time frame, so multiple days where the market found support right there where the blue box is, and then turn around and went back up. So we don't want to take for granted that it's going to break out. We want evidence that it's breaking out. So for me, that will be the break underneath 1.3000, staying above 1.3000, potential for reversal to go back up. We don't see it yet, but definitely something to watch for. If you're going to go short, again, I tell people in the trade room all the time, if you're going to go short, if you're going to sell anything, you want to sell at a higher price. So we're not at the highest price. We're at the lowest price for the past couple of days. So it doesn't make sense to go short unless it breaks out underneath 1.3000. Take it down to the 4-hour time frame. We see it challenging that 1.3000 level now again today. This is the bottom of the pink zone. Again, we want a confirmed breakout underneath 3000. Then, of course, it increases our confidence that it's going to continue to push down towards the next support, which would be the blue shaded area all the way down here into the 2950-20 level. A breakout under the 3000 level sends it lower. Otherwise, support and potential reversal. Take it over here to the US yen. We can see similar situation. I'm just going to take it on down to the 4-hour time frame. We found support at the green zone. That's not too hard to see. Evidence of potential short-term reversal with this big blue candle tackling back here into 100.85. But again, we've already seen resistance here into 185. Where it found resistance and turned and held back down or went back down to the green zone. So what's the next thing we're looking for? We're looking for the break above the blue zone, 100.85, to send it back to the pink zone. Until it does that, it could find resistance here once again and head back down towards the green shaders. So that's what we're going to watch for here today. I don't think we really want to go short yet. No evidence that the sellers are coming back in until it maybe pushes back underneath 160. But right now, watching for the breakout above 180 could give us the continuation or reversal back higher again for the US yen. Aussie dollar reaching into resistance today. We've seen resistance here before many times, and support, by the way. Just look back here where this first left black triangle is. Look at the resistance there. We've seen it before here. 1, 2, 3, 4 days finding resistance here. Go back to the right. That's where we are right now. 76, 65, 70 into that area. So within there, there's the potential for reversal. We've seen it before over here where that first left-hand black triangle is. So watch for a reversal, evidence of reversal to send it back down. Otherwise, a clear breakout above the blue zone, which would be an open and close above 76.65, sends it back higher to the next resistance, which is clearly 77.20 to 50, the green shaded area up here at the top of the chart. So even taking it down to the 4-hour time frame doesn't really change that. You still see it holding in there. Doesn't really give you any confidence to buy it. We're underneath this last support congestion zone back here on the left. It needs to break through 76.65, 70 before I would have confidence in buying. Remember, you don't want to buy anything at the highest price. You want to buy it at a lower price or a breakout of resistance. One last thing here. Let's take Fibonacci from the last high down to the current low. Interesting enough, 786 sits right there at 76.69, 70, somewhere right in there. At right now, capping our resistance. So it needs to break through there, 786, and that resistance zone if we're going to see it go higher. Otherwise, potential zone of reversal here for the Australian dollar. New Zealand dollar, again, similar situation, but we've been studying this resistance for weeks now. Look at the three blue circles on the left-hand side into the pink zone. We made the rally into the resistance. We've been challenging underneath the long-term red trend line for several days now. We held resistance into the 73.50 level even on yesterday's news out of New Zealand and the U.S., now finding it pushing back underneath 73.25. So clearly, earlier this week, we took a sell into the pink zone. Possible opportunity for a reversal once again here into the pink shaded area. And the only reason to buy it, and I've said this all week long in the trade room, is it breaks above 73.50, which it has not done quite yet. So definitely some things to think about here. But we're watching for evidence of reversal once again for the New Zealand dollar into the pink shaded area. Take it down to the 4-hour time frame. There it is. Challenge, no open and close, no breakout above the pink zone. Now we're back into it and challenging underneath it. So a push back underneath the pink zone. Let me zoom it out one time here. A push back underneath, open and close back underneath, will give us confidence that, or increased confidence that it's going to pressure back down towards the orange zone or lower for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.